Good afternoon, everybody. This is Mark, and we're back here for the daily recap. It is Tuesday. Beginning of earnings season is upon us. Obviously, last week we had a bunch. This week we have, a ton more on the docket. I think that's really going to dictate how the market reacts and where we go from there. Today could have been a telling day. Not so sure yet. I'm not one to say day one of something, but I did see some weakness in some leadership, certainly in some of the high beta stocks that I do like. Namely, first on the board is Tesla. It was down a little bit in the morning on downgrade from Goldman, but how it reacted to me is a little bit telling and a little bit nerve-wracking. It was just added to the NASDAQ 100. Either way, it obviously penetrated its 21-day moving average, which it has not done since early June. It looks like the 50-day is possibly next, but certainly on a gap down, I think it will be viable. I don't think it's going to do it in one straight shot, and then it will probably, recharge itself, and we'll see what happens from there. But either way, if you got short, congratulations, it's a great trade. I know I've been, tearing out of my longs over the last few days, certainly into Friday's move, and I had a little bit left over today, and I got totally out of it. Did try buying it a little bit this morning, and this afternoon, but that's part of the game, and that's how, I personally trade. Most of the other high betas held in there a little bit, but they definitely, took a little bit of a hickey. LinkedIn, second down day in a row. It did hold its 8-day moving average, I think it looks like. But the 21-day could be in the cards before earnings. We'll have to wait and see how that works out. Same, Amazon held in there very well. Looks like the moving averages are playing catch-up. Google took a little dip, but nothing significant to really write home about. Netflix actually went up for the day and still looks good, but if high beta starts to roll over, they're all going to roll over. That's just how it works, and that's just how it ends up being at the end of the day. So we'll see what happens. I don't know if this is the beginning, but minimum the warning signs are on, and the fact of what we've done over the last few weeks has sort of been a telltale. We probably should digest. It's actually a healthier trade for this market if this week and maybe even next week we just move a little sideways, maybe a little downward action. August historically is not a strong month, but with earnings, the strong will survive and the weaks will obviously fall by the wayside. Leadership, Goldman Sachs obviously gapped up this morning on decent earnings and really reversed pretty hard. Not a whole lot of damage, but a nice reversal on the daily candle. Maybe it comes back down to its 21-day moving average. We'll have to wait and see. That, caused some of the others to reverse a little bit, but nothing to really write home about. Even BAC was actually pretty strong, still right at highs. So not a lot of damage, guys, but enough that it puts the yellow light up to say what's going to happen. Solars had another up day in the AM and then reversed a little bit. Means a little bit of rest is due, at least for FSLR. SPWR, little extended, came down a little bit. New industry groups keep popping up. I've said the home builders were very relevant early in the year, became a little bit irrelevant. They tried to, they're trying to make themselves relevant again, but an industry group that we don't concentrate on enough, and I think it's really something that's going to be in play for a while, the semis. You can just look at the SMHs, something I've been talking about for a little while. Obviously, Intel's a leader, which is lagging, but then you look at some of the, AMAT, Broadcom, not as pretty, Clack, very pretty, AMCC from the other day, which we were talking about. So it's an industry group that, quite frankly, was in play at the beginning of 2000, which I think for a lot of the traders, and for anybody who's been doing this a long time, you understand the semis and the stocks that used to trade. For a lot of people who have been doing this 5 or less years, quite frankly, they have not been in place since. So they might get back in play. They might become a little bit more relevant as the switchers and networkers like Cisco, Juniper, Ciena, some stuff that, again, not the run-of-the-mill stocks that we normally play consistently, but it's a new industry group that I think needs to be watched, and people have to look at least accordingly. Oil still hanging up there. I really have not traded the oil stocks in this entire move. You got to pick what you like. Got to find your levels, and quite frankly, I have not found any that I really are so juicy enough for me to really just lay into. And at this point, I do think a rest is due. So I wouldn't be surprised to see a little bit of a rest across the board. Now, we could get above the 1,700 on the S&Ps and push through there to come back down That could happen. That could be in the cards before, we need a break. But again, do you want to be the guy who gets the absolute top? Just like you want to be the guy that catches that. It's great if it happens, but you want to catch the meat of the move. And I think we've caught the meat of the move for the most part. And I would expect some digestion. I would expect some certainly, relative strength, relative weakness as earnings start to come out. And that's where we're at. Yahoo came out after the close. Looked pretty good to me. For the most part, it's down a little bit right at the 21-day moving average. So we'll see if it holds tomorrow morning. Is that going to be a tell for earnings? I think the tell is Google. Obviously has had a nice move all year from, mid 700s, high 7, actually it was early in the year it was at 650 and change, 680, all the way to 900. Nice percentage move. It has to obviously beat earnings and beat expectations in order for this to react positively, which possibly would be the $1,000 mark, which I know has been reached. Analysts have been putting on as targets. We'll have to wait and see. That's going to be Thursday after the close. I think that's going to be a little bit of a tell for other high beta stocks and how they're going to react, at least for the next few days. So Google on the docket Thursday after the close. I think it's going to be a tell for this market across the board. Bernanke speaking tomorrow. I don't think he's going to say anything exciting. I don't see why, versus what he said last week, is going to really dictate anything in the move, except that we're still overbought. Market seems to be a little tired right here after such a nice move. It's fine to take some risk off. That's really what it comes down to. And certainly you can start running the short side a little bit more. If we get a few more days like today, you can just see what happens. Leadership across the board also. XONE, a stock that, a new issue and in the right industry group, the 3D printers, and you could just see it really just went right through, cut right through its 21-day moving average. Maybe the 50-day is next at 50 and change. That is the next support area across the board. That's what worries me. When these leadership stocks or even mid-caps, which Russell was leading us along the way, start to cut through key moving averages with volume, it concerns me a little bit, and maybe it could be a tell of what could come down the road in the next few weeks. It's minimum. It's more important to be prepared for that, understanding this action could be just isolated to these few stocks, but most likely it could, it could be a little bit more widespread across different issues. So that's my thought process. I've been lightening up over the last few days, just understanding that we just run a long way and I'm keep taking risk off. And today I got a lot lighter, and I'm going to stay nimble at least through earnings season, and we'll see what happens accordingly. So hopefully we're able to take advantage of the day. Hopefully if you've been taking advantage of the last few weeks, you've taken some risk off. I think it's a smart time to take some risk off. Yes, we can get a little bit more of an upside move, but I would expect more digestion than anything else. I think it's going to be a little bit trickier than it has been the last few weeks. Not that it hasn't been tricky. If you haven't been on the long side, it's been very tricky because we really just gap up and really don't go a whole lot of places. But I think from a trading point of view, I think you could see a little bit more volatility back in this market over the next few weeks. Ideally, you like to see that because it creates, more opportunities for us in the future. So hopefully you were able to take advantage of today. But again, I think it was a little bit of a yellow signal warning sign of what's to come with earnings season. It means take off some risk, try to be a little bit more specific with your entries, and respect the fact that if moving averages do not hold, you gotta avoid, and you always have good risk versus reward scenarios in place. Respect your stops. I think that keeps you in line, and obviously when it does rally, you're going to see it very clearly. So hopefully you had a good day today. I will see you all tomorrow.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.